All right, so far so good. We have been able to look at everything under the notes provided for CVPA, which I told you that CVPA is also known as break-even analysis, a point where a company does not make a profit and does not make a loss. So we looked at the assumptions of break-even analysis, which I said you should know at least 5 of the assumptions. You can pick them randomly for the sake of theoretical questions. We look at various ways that we can apply break-even analysis, where we say we can use break-even analysis to determine break-even analysis in units and in sales value. Then we also looked at break-even analysis to determine the amount of profit you can earn before tax. So profit before tax plus fees, cost all over contribution per unit. And I made mention that whenever you're looking at per unit in break-even, make use of contribution as the denominator. Then if you are using sales value or in Naira as your what you are looking for, if that is what you are looking for in Naira, you use what? Contribution margin ratio. As you can see, sales will use contribution margin ratio. Then we came down and look at margin of safety. And I told you that margin of safety can also be in units and in value. And we'll look at the formula to address this. Okay, which is this. Then we'll look at contribution margin ratio, which is also in units and in total. And we did that as well. So let us look at some practical questions on how to apply break-even analysis. So we'll be looking at this set of questions here. Increase, okay, no. Okay, so this is the solution to the questions. So let me get my hands on the question. Is it this? No, it should be this. Okay. So we have illustration 1. The following figures relate to a company's manufacturing a varied range of products. Before I continue, whenever you are trying to attempt questions in your exam, read the requirement first. If you read the requirement first, you will know if you know the question or not. So you will not waste your time reading the whole stories. Then when you now come to the requirement, you now say, I don't know this one. So read the requirement first. Calculate the fixed cost. Oh, fixed cost, I can do that. Profit volume ratio, which is contribution margin ratio. Okay, that's good. The break-even point, okay. The margin of safety, year 1 and 2. So after reading your requirements, you now come back to your question because you already have an idea that the answer, the question is simple because you know it. So let's continue now. The following figures relate to the company manufacturing a varied range of products. The data that was given to us are for year 1 and 2. In year 1, we made a sale of 39,000. In year 2, we made a sale of 43,000. The total cost of making a sale of 39,000 is 34,800. The total cost of making a sale of 43,000 is 37,600. As simple as this question. Assuming you are required to assuming stability in prices with variable costs carefully controlled to reflect predetermined relationship and an unvarying figure for fixed cost. Selling price per unit is 1 naira. Forget about all this grammar that is here. Selling price per unit is 1 naira. That is what I need to know. Calculate A, the fixed cost, B, profit margin ratio, break-even point, and margin of safety. Now, from this particular question, we are giving total cost figure. And I remember telling you that whenever you are giving total costs, I mean that inside total costs, there's what we call variable cost and what? And fixed cost. And now the question is telling you to get only fixed cost, which is requirement number A. So what you need to do is that you have to apply a technique in costing known as high and low method to bring out fixed cost out of this total cost. Are you getting it now? So we have to apply the high and low method to extract fixed cost out of these total costs. So let us look at what we did under solving A. This is an icon adapted question. So let's see what we did. I hope you can see my screen clearly.
Yes, sir.
Okay. So we have question 1. Now I said using high and low method to determine variable cost per unit. We were asked to get fixed cost, but before you can get fixed cost, you need to solve for variable cost first. So that is why I titled my heading using high and low method to determine variable cost per unit. Now, what did I do? We had 2 years, isn't it? We have 2 years. Under high and low method, we are trying to say that the total sales given to you and the total cost given to you, pick the highest and pick the lowest. Subtract the lowest from the highest. So for total sales, what is the highest? 43,000. What is the lowest? 39,000. So let's see. For total sales, what's the highest? 43,000, as you can see.
Yes.
What's the lowest? 39,000. I did my minus and I got what? 4,000. That is just high and low method. The total sales, Sunko, let us check that one. In total sales, the highest here is 37,000 and the lowest here is 34,800. So let's confirm 37,000 and 34,800. Once you subtract, you get 2,800. That is the concept of high and low method. Pick the highest from the total sales, pick the highest from the total costs. Subtract it from the lowest and from the lowest, more or less like you are doing range, highest minus lowest in statistics. So what do? We have 4,000 and we have 2,800. To get your variable cost per unit, you are going to say your total cost divided by what? Total costs, this is total costs, divided by number of units. Number of units. That's number of units. So what's my total cost? 2,800. What's my number of units? You may be confused that maybe it's 4,000 that is here that I picked. 4,000 here that I picked is correct, but in some cases it will not be correct. Why? How do I know my total cost? My number of units. My number of units is what? The total amount that I sold, isn't it? Divided by per unit of sales. So if I sold 4,000 units, if I sold 4,000 units, if I sold 4,000 naira, because that is my total sales, 4,000 naira, divided by, the question told me that per unit of sale is what? Selling price is 1 naira. So if I sold 4,000 naira and one of the item is 1 naira, so it means that I sold 4,000 units, 4K units. Does that make sense?
Yes, sir.
Good. That is why I got my 4,000 here. So if this is 4,000 and the per unit is 2 naira, you go and divide, okay, to get the quantity you are dividing with here. So most times this 4,000 will not always be correct, depending on how the question comes. So what is my variable cost per unit? 0.7 naira. As simple as that. Now that I know my variable cost per unit, I will now have to get my fixed cost, because that is what the question wants me to get. But I need to get my variable cost first before I get my fixed cost. How do I get my fixed cost? I can either use this formula or use this formula, anyone I can remember. Fixed cost is equals to y. Fixed cost, to get fixed cost, y is equals to what? A plus bs. This is what we know as, we call the cost function, in case you see it in your OBJ or short answer. The cost function. The cost function is equals to y is equals to a plus bx, where y is total cost, which is this, total cost. Where a is fixed cost, which is this. Where b is variable cost per unit. I repeat, b is variable cost per unit. While x is total number of units. So this is the meaning of the cost function. Now, if one cannot remember this, you can either use this one that is used in economics, where we have total cost is equals to what? Fixed cost plus variable cost. This is also used in accounting. So total cost is equal to fixed cost plus variable cost. But you can just know this because of your short answer and OBJ, the cost function. Anyone you use, you get the same answer. Now, what are we going to do? We are going to pick this formula and begin to pick figures from our workings and slot it into this formula. In this case, I'm using year 2 as my proving. I'm going to use year 2 data. Remember, I can either use year 2 data or use year 1 data. I will still get the same answer. So I want to pick year 2 because year 2 has total cost. Year 1 also has total cost. So which of the total cost can I pick is the question. So costing allows you to pick any of the total cost. So if you are picking year 2, you can pick year 2. If you are picking year 1, you can also use year 1. So in this case, let me use year 2 first to test. What is my year 2 data? Year 2 total cost is what? 37,600, which is this. Year 2. So total cost is equals to, what is my fixed cost? That is what we are looking for. So that will become my unknown. Plus, what is variable cost per unit, which is B? Or this variable cost you are seeing. This variable cost you are seeing here simply means B times X. So what is my variable cost per unit? We have gotten it here 0.7. That's what I did here, 0.7. Are you getting it now? Then what is my X, which is the total number of units I produce? My X is 43,000. Why? I'm looking at year 2 data. So my X, which is my total number of units produced, is 43,000. How do I know? If I spend 43,000 to make an item and per unit is 1 naira, 43,000 divided by 1 naira is still giving me what? 43,000. So I am always dividing by the unit of selling price. So I'll be able to get back my total unit I sold. Don't forget, this total sales is in naira. So naira divided by 1 naira will give me quantity. So that is how I got my 43,000 in units. I hope you are following me.
Yes, sir.
Are you getting me?
Yes, sir.
Okay, good. So I have 37,600. My fixed cost is the unknown. Then 0.7 multiplied by my total number of units to produce will give me 30,100. Simple mathematics. I make FC to stand on its own, which is fixed cost. So if I bring fixed cost, I'm going to say what? 37,600. This plus will come to the other side, which is what? Minus 30,100. So if I subtract, my fixed cost becomes what? 7,500. So with this, you have gotten the requirement of A that says you should do what? Get what? Fixed costs. So remember, if you are given total cost and you are told to get fixed costs, you have to solve using high and low method. Are you getting it? Which we have done in this case. Now, I had to prove again using my year 1 to tell you that the answer I'm going to get if I use year 2 data and if I use year 1 data is totally the same. So let me use year 1 data. What is my total cost in year 1 data? 34,800, which is this. Fixed cost is unknown, plus my variable cost per unit is also the same thing, 0.7. What is my total quantity? It's 39,000, because 39,000 divided by 1 naira will still give me 39,000. That is it here. Then I have 34,800. Then I have fixed cost plus what? This multiplied by this give me what? 27,300. My fixed cost, I'll make fixed cost to stand on its own. It will be equal to what? 34,800. This plus will change to what? Minus 27,300. So my fixed cost will still give me what? 7,500. So whichever way, whether you are using year 2 data, whether you are using year 1 data, your fixed cost is always fixed. Are you following?
Yes, sir.
Good. Now, let me tell you something again. For the fact that I said that we are going to be having total sales and total cost for high and low method does not mean that in all questions it's going to be total sales and total cost. In some questions, you will just see number of units sold and you see total cost. Do the same process. But the thing is that if you're already giving number of units here, you don't need to go and be dividing by 1 naira again. Do you need to? Because what we need here is number of
Yes,
units,
sir.
but they only give us total sales. So we are only converting total sales to number of units by saying 39,000 divided by 1 naira. But since the question has already given us number of units, we just pick the 43,000. Don't divide it again by the cost per unit. Does that make sense?
Yes, sir.
So we are good to go. That is question number A. Then the B says determine your PV ratio, which we call the contribution margin ratio. And I told you contribution margin ratio is also known as contribution to sales ratio. So from the word contribution to sales, just put your contribution up, put your sales down, and you are good to go. How do we get our contribution? 1 minus variable cost. 1 naira is your selling price per unit, minus 0.7, which we have gotten here before as our variable cost per unit. Then divided by what? Sales again, which is our what? Selling price per unit. And our contribution margin ratio is what? 0.13. Does that make sense? 0.3, sorry. Does that make sense?
Are you using per unit to solve?
You said?
Are you solving it per unit? Contribution margin ratio in units.
Contribution margin, I didn't get your question, sorry.
Is that the formula you are using? PV
Yes, that's the
ratio
formula
in
I'm using.
units.
Contribution margin ratio. Either I use this formula or I use sales minus variable cost all over sales. Let's check the notes. Contribution margin ratio. This is it now. Selling price minus variable cost all over selling price. So it's the same thing. Let's see.
Okay, so selling price is the same thing as per unit.
You said?
Selling price is the same thing as per unit.
Yes, selling price per unit. Selling price is the same as sales price. That's per unit, 1 naira. Don't use total. Don't use total for this. Don't use total for this. Okay? Because you have variable cost per unit. So you must use selling price per unit divided by selling price per unit as well. Because what we are trying to get is contribution margin ratio per unit. not total contribution margin ratio. If it's total, you will now begin to use total sales minus total variable cost all over total sales. In most cases in cost accounting, all the figures we are trying to get is per unit. It is better for you to get per unit so that you will multiply it by the total number of units than you now get total and begin to divide back to get per unit. So in cost accounting, even when you get to professional levels, what we are working with is per unit. Are you getting it?
Yes, sir.
Okay, so I use per unit sales. I'm also using per unit what? Variable cost. I also use per unit sales also as the denominator. So this is the formula. Apply the formula, you get your PV ratio. So B is out of it. Let's look at C. C says we should get BEP in Naira. Let's confirm. BEP, okay, break-even points. Now look at this break-even point. They were not specific. It simply means that they want us to get both in Naira and in what? And in units.
Yeah.
So we need to solve for the two. So what do? Break-even point in Naira. According to the formula, it says fixed cost all over contribution margin ratio. If we can confirm, break-even point in Naira. This is it. Fixed cost over what? Contribution margin ratio, which is this. So we already know what our fixed cost is. We already know what our contribution margin ratio is. It's just very simple. Just slot that in. No case. What's our fixed cost? 7.5. We solved for it before. What's our contribution margin ratio? 0.3, which is this. So if you divide it, we have 25,000. 25,000. So this, you have to sell up to 25,000 naira for you to break even. That is the interpretation. You must sell 25,000 naira to break even. So at a point where you sell 25,000 naira, there is no profit, there is no loss. That is what it means. Now, let us get BEP in units. If I know my BEP in naira, there's no stress. If I sell 25,000 naira, I'll divide it by what? How much am I selling per unit? 1 naira. It's in the question. So how many units am I to sell? 25,000 naira. So I need to 25,000 units. So I need to sell 25,000 units for me to break even. That is just what it means. I need to sell 25,000 units for me to break even. Are you getting it?
So I have a question.
Okay.
So can you use that fixed cost times selling price per unit over contribution per unit formula
For which one?
to get BEP in Naira?
Okay. So BEP in naira, where is it? Which of the formula? This one?
Yes, the last one. Can you
Okay,
use
punch
it?
your calculator. Do you have a calculator there?
Yes, sir.
7.5 times 1. What do you have? 7.5.
7.5.
Divided by what's your contribution per unit? 0. Point what? 0.7.
0.3.
We got contribution per
0.
unit. What's contribution per unit?
0.3.
0.3. We solved it here. No. What is our contribution? 0.7. Okay, 0.3. This is contribution margin ratio, not contribution per unit. This is contribution margin ratio. So what's contribution? 1 minus 0.7 is still giving us 0.3, isn't it?
Yes, sir.
Because sales minus variable cost will give you contribution per unit, which is 0.3. So do that. Let me see.
Okay, you get 25,000.
You do get it?
Yes, sir.
Okay, so any formula you use, you are okay. All right, let's proceed. So is it clear now?
Yes, sir.
So let's move to the E. E says we should get margin of safety. Margin of safety. Please be very careful. The question will tell you to get margin of safety, and the question can also tell you to get margin of safety ratio. We are going to look at the margin of safety ratio, but now we are looking at just margin of safety. So I'm going to tell you that margin of safety is different from margin of safety ratio. So this is just margin of safety. So let's see the question. So margin of safety for both year 1 and year 2. So let's look at that. What did I say about the formula for margin of safety? Let me remind
It's
you here.
budgeted sales.
Budgeted unit minus what? BEP in unit. If you're looking for margin of safety in unit, then for margin of safety in value, budgeted sales minus what? BEP in what? Sales. So as
Sales
simple as
price.
that. What's our budgeted sales? Is in the question. For year 1, what is the sale that we say we want to make? 39,000. Why? Because 39,000 divided by 1 is still 39 what? Thousand. Are you getting me?
Oh, okay.
Good. So we have 39,000. Then what's our BEP in sales? 25,000. Are you getting it? We got 14,000. In year two, what do we have two? 43,000. Year two, our budget says what? 43,000. The budget says is the one given to you in the question. Are you getting it?
Yes, sir.
Good. Then our BP in sales is what? 25,000. So our margin of safety is what? 18,000 for year two. So that is just as simple as it is. So, but just be careful that margin of safety is different from margin of safety ratio. So as we proceed, we'll solve questions on margin of safety ratio if we come across them. But this is just margin of safety. So with this one, we have been able to understand how to separate variable cost from fixed cost using high and low method. We have been able to solve for PV ratio, which is known as contribution to sales or contribution margin ratio. We have been able to solve for BEP in Naira and BEP in units, and we're able to solve for margin of safety for 2 years. Are you with me? So we'll be looking at question illustration 2, and we'll be explaining what this is all about. Are you with me?
Yes, sir.
So let's do the needful, log out and log in.